Corruption and mismanagement are two words that go hand in hand when talking about the government. Actually, scratch that. Are two words that go hand in hand when talking about any form of authority. But I'll get to that in just a second. I don't know about you, but I'm sick and tired of all these crypto YouTube pages talking about Ethereum with no explanation to what it actually is. When it comes to investing, fundamentals are key, especially if you plan to hold longer than a year to avoid paying taxes on that crypto. And with crypto being such a volatile space, it makes it a lot easier to hodl on those dips, especially when you know what you're investing in has actual fundamentals. So I decided to make a video explaining what Ethereum actually is compared to those YouTubers who just talk about the name of Ethereum without actually talking about the technology itself. By the end of this video, you'll have an understanding of what Ethereum is and how it actually works, as I believe it to be one of the best investments you can make in the next 10 years. So without further ado, let's get into the video. Ethereum is the #2 cryptocurrency at the time of the recording of this video. However, I believe within the next year or two, it has the fundamentals and potential to eventually flip Bitcoin and become #1. If you need a quick explanation of what Bitcoin actually is, I just made a video called Bitcoin Explained for Beginners. Take a look at that, it's in the link below. Speaking of Bitcoin, if you don't understand what Bitcoin is or the fundamentals or even how it works, then I recommend that you learn that first before continuing to watch this video, as Ethereum runs off of the same technology that Bitcoin is based off of. Since you are still watching this video, you must have an understanding of what Bitcoin is and how it decentralizes money. So it makes me bring up the question,
what other things in life would be better decentralized?
Entering the blockchain. I made a video about this already, but I'll give you a quick explanation to what it actually is. The blockchain was created by fusing already existing technologies like proof of work, cryptography, and decentralized network architecture. Bitcoin's code is written in a turning, incomplete language. This language makes Bitcoin only understand a small set of orders, like who sent what to whom. By doing so, it creates a system that has no central authority. In short, blockchain to Bitcoin is the internet to email. With this new technology, people started to think of other things that needed to be decentralized other than money. And soon enough, people started building applications and programs using the blockchain technology. In order for people to decentralize other aspects of society that were more complex, they needed to use a different coding language that was still capable of using the blockchain technology. Enter Ethereum. Ethereum was brought to life in 2014 by Vitalik buterin. Vatalik was no stranger to the blockchain technology, as he was the co-founder to Bitcoin magazine. Ethereum is a do-it-yourself platform for decentralized programs and applications, or what people like to call dapps. Ethereum gives people the ability to create programs that have no centralized authority or controller, and that goes for the creator himself too. Ethereum's coding language is different from Bitcoin's because it allows more complex information to be stored. Ethereum implements two coding languages, Solidity and Begin Coding. Technically, Ethereum isn't a currency. The more technical term would be to call it a platform.
But I thought the internet was already decentralized.
Yikes. This is where things get a little bit confusing, as technically the internet is decentralized, but in practice it's not. Let me give you an example of this. When you use the internet, chances are you interact with a third-party tech giant like Amazon, Facebook, or Google. The problem with this is that because we are interacting with these tech giants, they now have the ability to withhold certain forms of information, thus shifting our ideas of what we actually believe to be true. Ethereum allows people to share and connect on the internet without them having to interact with a third party.
Okay, I understand what Ethereum does, but how does this thing even work?
Well, Ethereum's coding language Solidity is used to write smart contracts. Wait. Let me give you a better example. In real life, a contract is nothing more than an agreement of ifs and thens. In short, a set of conditions and actions. For example, if you pay your landlord on the 1st of every month, then he lets you use the apartment. Now, Ethereum's developers would instead write the code for this contract, and Ethereum would host it on its network and decentralize it. The way it would do this is Ethereum would be the person responsible for letting the individual back into the apartment and not the landlord himself. A smart contract deals with all elements of a contract, from enforcement to management to even payment. Another example of this is if you were leasing a car, and had a smart contract attached to it. Instead of the car dealership being responsible for the contract, Ethereum's network would be. And Ethereum would enforce, manage, and even be responsible for collecting payments. Sounds almost too good to be true, like a true revolutionary technology, right? Well, I want to keep this video 100% transparent with you guys, and also talk about the cons to smart contracts. Going back to that example of the landlord to tenant situation, if the contract detects that the renter didn't pay the landlord, then the smart contract would lock the renter out of the apartment. The problem with this is that true intelligence has the ability to consider other forms and variables of the situation, and doesn't look at things strictly from a black and white point of view. Examples like extenuating circumstances, the spirit in which the contract was written, and the ability to make exceptions if needed. In short, act like a real judge. A smart contract doesn't have the ability to make compromises and is instead letter strict. It follows the contract down to a T, like what happens in most real-world contracts. Once a contract is added to the Ethereum network, it can no longer be edited or changed due to the fact it runs off the blockchain technology. The problem with this is that Ethereum is designed for really complex contracts, and the problem with really complex contracts is that they're extremely hard to secure. In short, the more complex something is, the harder it is to enforce, in order to make sure that the contract does exactly what the author intended it to. A contract on Ethereum is the ultimate authority, as code is law on the Ethereum network. However, this all came to a halt when the DAO event happened. DAO stands for Decentralized Autonomous Organization, which allows users to deposit money and gets returns based off the investments that the DAO makes. So, the decisions on the DAO are crowdfunded and decentralized. The DAO raised over $150 million in Ethereum's currency, Ether, when it was trading at just 20 cents. But problems soon arose when someone saw that the DAO's code wasn't written properly and started to drain the DAO of money. And this all happened due to loopholes written in the DAO's smart contract. This made a huge stir in the Ethereum community, which ultimately made them decide that code was no longer law in order so that they can revert the money back to the DAO. In short, the smart contract writers for the DAO did something stupid, and it caused the Ethereum developers to step in so that they could bail them out. The majority of the people sided with the bailout, while a small select few wanted to continue to withhold the fundamentals of code being law, which created a division in the community. The majority sided with the bailout, while a small select few wanted to continue to withhold the fundamentals of code being law, which is also how Ethereum Classic was born, aka the people who believe that code should always be law. Now, when people talk about the price of Ethereum, they're actually referring to Ether. Ether is the currency that incentivizes people to run the Ethereum protocol on their computers. This is done very similarly to how Bitcoin miners get paid to withhold the Bitcoin network. Now, in order to deploy a smart contract on Ethereum's network, its author must pay to do so. This is done so people write effective code and not waste the computing power on the Ethereum network. Another reason why Ethereum costs money to use is because Ethereum uses the blockchain's peer-to-peer system, which rewards those who supply computing power to the Ethereum network by incentivizing them by giving them Ethereum's currency, Ether. Ethereum's price launched at just 40 cents per single Ether back in 2014, and the price has been extremely volatile since. Which leaves me with my final note. All cryptocurrencies are extremely volatile. Ether back in 2017 had a high of $1,300 per single Ether, before shortly after that crashing over 70% down to the low hundreds. At the time of the recording of this video, Ether's price sits at just over $4,100 per single Ether. Sure, Ether is due for a crash soon, but if you plan to hold and play the long game, then I see Ether as a great investment.